So this is the M1 strategy, which is set on 1 minute chart of the major FX pairs. We want to do fast get in, get out kind of trading, targeting 10 pips or around, above is if possible. And this is the idea for that same thing. So as you can see, we are using these four indicators. Especially, we are using the MA 50 MA. That This is the SMA 50 on the time uh, frame of 1 minute, which is there. The bull market support band, which we have previously used, it's the same. The idea is also the same. We're using the divergence indicator, and we're using the SMC concepts as well. SMC as well. So the idea here is to trade fast, get into trades and get out quickly with realized gains. So what we will look into, there are many scenarios that can arise in trading these pairs over time. But how do you identify the better trades? How do you identify which are not to be taken at all? Uh, so how do you do that? So the first step is to look at the 50 MA direction. So it is a curve that is either sloped up or sloped down. Very rarely it is flat like this in the 1 minute scale, because I on the lower time frame it is either rising or falling, generally speaking. So what we want to do is understand the direction it is in. So it is in a bullish direction, as you can see, for the better part of uh, 2 days, but in a slow manner, in a choppy manner, it is going up and down, up and down. So that after we understand that, that is our broader perspective. So this means we can target both sides of the market. So now what we do, how do we find the buys and sells? What are our buys and sell areas? So these are the AV webs. As you can see, this is the AV web, the red one, that is previously marked on the chart, which is fine. It acts as a resistance as well. And even if that AV web is not there, we have the order block that is there right now. And the bottom order block was already on there. So we can also draw some confluence from this, where the order block is, and trade accordingly. Like for example, this is a short trade, which is if you took around here and went to this SMC level. There were previous SMC levels as well. I think, yeah, this would be an SMC level OB, and when that broke and this went to there, you don't immediately close it. You see what's happening, how the price action is dealing with this level. You can see that the price is not being able to close or erase this level. The lower discount level was created. Obviously, when the price was there, this discount level would have been at this level as well. So that mm, that creates a upside pressure, and during this some of this point, you might have exited your short trade. And generally speaking, this could be a signal for that uh, to do. But in general context, if that happens on a trend, let's say you are on this long trade and the crossover is happening here, this is not a significant level for you yet, because there is no V there, there is no previous resistance there. Uh, it is broken on the upside, and it can target that AV web. So you probably would keep that trade going in. Also, the important factor is the price didn't even touch your uh, what the band at that point. So that's pretty much the whole idea of understanding price action. Now we come to triggers. What is actually a signal? So the signal is basically the inside bull band crossover. So the green one going above the red one on the upside is a bullish signal, and the same the green one going below the red one on a bearish trend is a sell signal. So this is buy, this is sell. So what do we do when this happens randomly around this area? So this cannot be uh, bearish signal. Why is that? Why this cannot be a bearish signal? Let me just mark it so we understand it better. So why is this not a bearish signal? So to understand that, we have to understand two things. The confluence thing. The MA is rising, the band is rising. So this is a bullish trend. So we're looking for buys. This is immaterial to us. We are not even closing our existing trade. Let's say you are already in a bullish trade. You're not even closing your trade at that, let alone taking a long short trade at that point. The red one going below the blue one, green one, is not a sell signal. A sell signal is exactly the same when the green one. Sorry, sorry, I was looking at marking the wrong thing. So this is not a sell signal. Why is this not a sell signal? Because the price MA is rising, the price band is rising. We are on a uptrend channel. There is no flattening of the curve on either of them. We are away, still not any close to, like you're not close to any significant level. So if you look at horizontal, we are looking at the higher levels uh, for that sell signal. So what is the sell signal? The sell signal is actually this, and not even this. We cannot sell here as well. I'll say why that is. So the price is, the curve is slowing, but it is not downsloping yet. The MA bull band MA, same thing. It is slowing, but it is not downsloping yet. Let's go to the next retest. So at this point, it is retesting. The band is lower, so it has changed direction to the downside. But the moving average at that point is still upside, up channel. Only at this point, only at this retest, we have a confluence of both. The MA is now falling at this point. If we draw a horizontal level, let me draw the horizontal level so we can understand. So let's say at this level, if we draw a horizontal level, the MA is falling, the band is also falling. We are testing this level, we are shorting it. We have a clear target ahead of us because of this uh, order block. And if we target the order block and we see what it does next and then decide. Remember, the order block is not your target. The idea is not based on order blocks. The idea is not based on divergences. Divergences is not the end deal. It is about losing momentum. So at this point, it is losing momentum. At this point, the curve is shifting. At this point, the curve is shifting. These are actually your signals to get out. You can get out early if you are getting better. If you get a better understanding of the price, you can anticipate price action, or you can be a little late. That depends on the quality as well of and the skills of the individual traders. There is no clear clear guidance on that. Some traders would get it early, some traders would get it late. That's just how it works. Now, what is a buy signal? So let's remove this. So this is not a buy signal. Why is that? It is still falling. MA is still falling. We are not buying. Where are we buying? We are actually buying at this point. What is happening at this point? Let's look at our perspective. What is actually happening? We are coming from our order block level. Our support was confirmed. It bounced. It retested. It bounced. It retested. The MA. It could not close below the MA. It tried for a few minutes there, 10 minutes almost. By that point, we had flipped. By this point, at least, we already had flipped our bull band. So the band was flipped, but it got flat at this point. But the MA was not still yet flipped. MA was still falling. By this point, MA was starting to rise. So the MA was already starting to rise. MA was shifting. The bull band is also kind of bullish and shifting. And then, if we zoom in, what is happening? our MA is actually getting the breakout we want. This is our signal. With that, what we are getting is even better. We are getting a FEG, fair value gap, on that same 1 minute bar. On the next 1 minute bar, we are retesting that, rejecting, and going through the whole thing. And we are not closing. So where are we closing? Ideally, where we are closing is, let's say, if we know this is a AVF, if you know that, if you have this kind of level, clear level, so at this point you are getting out. But if you don't, let's say the AVF was not there. Let's uh, let's hide this. So let's say this was not there. If the AVF was not there, what we would do is we would wait for the retest. So this is the retest, and again the retest, again, again. So at this point, when this is flattening, your band is flattening. So the band has flattened, or the next, or the close below. So these are 2 points: the band flattening or closing below. By the time it closes below, the band is actually downwards. The band is actually downwards. And a long time ago, we had the crossover as well. So these two are your points to get out of this trade. Take the profit if you have not already taken the profit. So that's still, if you enter here, that's still 11 pips, around 10 pips, and minus the two two pip spread, it's still getting you 8 pips, which is a logical amount of return in this style of trading, which we are after. Kind of 6, 8, 10 pips is enough. But if we can get more, well, I'll show some scenarios where we can get more. That is obviously better. Now, why are these not trades? Why are these not trades? So let's say this is happening on the right side. It is sloping up. It is sloping up. But why this is not a bullish trade? Uh, why is this not a bullish trade? Let's see. Your MA is at 27.53. Your price is at 27.58. So that's a 5 pip difference, where your target is, nominal target is 10 pips. That is not the range you want to trade at this point. You are 40 and you are trading at 43. 3 pips is enough. Even 5 pips is enough if you are in a scenario like this. This is crossover. This crossover happening, and the trade is happening. The crossover is happening at 12:54, and the trade is happening at inside 20 minutes. But this is after almost 1 hour, more than 1 hour, 1 hour 15 minute of the crossover. So it is kind of exhausted right now. So this is generating a lot of signals. Let's say, well, this is a bearish kind of, but this is flat, not down sloping. Again, this is flat, not down sloping. But yeah, on the next, by the next retest, both are down sloping. So this can be your sell signal, and you can target the midpoint, which is like 6, 7, 8 pips. Yeah, it is important to catch profits. It is not important to not let them get into losses, not wait out losing momentum, not be looking and looking and looking, not taking action. This is an actionable system. We have to react quickly. We have to be very, very engaged in our trading, and we have to be making decisions very quickly. Now, what is this? These are a little bigger trades. So this is 31, 50, almost 20 pips. How do we catch this? So we see the order block being created here. We see it being confirmed. We see it being a long trend from a long time. So this is US market open, kind of after 30 minutes after US market open, and price is trending up on a narrow basis. And after the midway through the US session, it finds support and retests, and the signal is ready, the slope is ready, and the breakout is happening with an FPG again. The breakout is happening with a fair value gap, the retest, the fair value gap. At this point, you can enter. Your stop would be again same, either these two levels, closing below either of them, or the market actually flattening. These two flattening would also be your close signal. But that didn't happen. It went to this area. Even in these T tests, it never closed below. It never closed below here either. and that's how you get these kind of momentum long trades, which are like 20 pips. So that's a very good kind of trade, which you have time to confirm these trades as well. So let's say you are downsloping, you have already confirmed your OB, you have like 9, 11, 9 to almost 11:22. So 15 minutes almost you have time to even confirm with us about your idea, what you want to do, want to trade, how you want to trade it, what you are looking for. All that you can actually confirm with the team, and then go with the trade. If you are feeling confused, you should not feel confused, because this is a very simple kind of trade. This is pop up, breakout, waiting for the signal, breakout, retest with FPG. Everything is in line. Now, same thing, it's happening. We're crossing down, both are sloping down, and the bull band crossover is happening at the same time. The MA crossover is happening. Significantly good signal. So this is a very good signal. Even if we take this, that's a 30 pip drop with 1 minute or 2 minute of retest. So when the downside is this explosive, either you can, let's say, you can do this, take the 5 pips. But if you do take the 5 pips, you need to be ready for the next trade. So the next trade is 20 pips. Need to be ready for that. So this is all happening within a minute, within 3 minutes, actually. So this bar closing. After that, you have 3 minutes time to either close and re-enter, or just hold it, because you have the momentum with you. Just hold for 1 minute or two. So this is kind of a subjective one. So both are correct. If you close and re-enter, that's fine. If you hold and see through this, that's also fine. But if you close and don't re-enter, that is not right, because the trend never actually, this is trying to flatten, but it never actually stays that way. By the next minute, it is again very downsloping. In the cross scenarios, I don't think you'll get more many trades, because of the criterias we have set. So the criterias will not be fulfilled in these cross environments. It is going to be very difficult to get signals in these areas. So if you're not getting signals, so you'll make less errors, and that's the way we protect ourselves. Again, yeah, this is a signal. This is probably a signal, but yeah, sometimes you can get this way. So when this is happens, things like these are happening, cross on the upside, cross on the downside, you can take a lower amount of profit, get out, wait for a better momentum, better kind of trades. These kind of trades can happen, can be there, but that is generally the idea uh, of everything, of how to do it. We may have other trade, see the same kind of trades. Let's say euro is not giving you something, or GBP is not giving you something. You have CAD, you have JPY, you have others. You can keep you on your watch list and just see them what is happening, and if something is triggering, uh, you forget of you just trade, enter these kind of trades, and wait for your profit and monitor them, and also look at the other as well. So you can split your screens as well. So let's say you're looking at two things, you can split it. You can split between, let's say, USD CAD and USD JPY, and then load your confluence strategy, uh, and look for trades that way. So USD JPY is still really volatile. It's going to fall at some point, and when it does, it's generally a good trend. Upside, downside, it generally trends well. But at the moment, it is having a hard time, because of obvious the difference between the BOJ and the Fed. Anyway, that's, I think, about the strategy. Everything about the strategy, how we want to trade, what we want to trade, and when exactly we want to trade. Uh, Mental picture of those assets are important. What is happening also, we need to avoid the important time or data times as well. For GBP and Euro, the data times are generally 11:30 IST and 2:30 IST. So you want to check if something is there around that time. Uh, for US market data or Canadian market data, it is generally 6 p.m. IST and 7:15, 7:30 for the industrial data, which come out generally PMIs or industrial productions. Those data come out at 7:13, 7:15 area. And if there is Fed action, that is generally midnight, 11:30 midnight. That's the time we generally get the data. Japanese data we are not trading at that time, so we do not need to be concerned about Japanese data. But yeah, that's all about on those specific periods. If we have data, we should not be in trades, in big trades, especially. Also, the market opens. The UE market opens at 12:30 IST, and the US market opens at 7 p.m. IST. At those specific time frames, there might be extra volatility in the market, which we should not expose ourselves to. Like for example, today we had a GBP trade. We closed before the EU market open due to the volatility, and it actually saved us from having gone into loss in that particular trade. Even though the data that the market that had, it was kind of on the bearish sentiment for the GBP. But yeah, that can happen. Counter reaction can happen. Anything can happen. So it is better to avoid these type of scenarios. If we are actually essentially trading a very lower time frame, 1 minute is the lowest time frame you can trade. uh, so our trends are generally less than 1 hour, so it is not generally going to affect us in the long run. So I think that's about it for all the trades and trade related strategy related things. I think this can be very successful if we do it rightly, and 30 to 35 bips per day per asset is surely possible in the strategy.